Hi everyone, very good afternoon to all of you present here. I'm Nitisha Jain, Assistant Manager of TaxBuddy.com, and today we all are here to know about the topic important takeaways for ITR filing, how you can file your return with more knowledge, what are the documents which are required for filing your income tax return, and everything. So before starting the session, I would like to welcome you all in today's webinar. I'll make sure that this session is very useful to all of you who are present here, and even after the session, who all will be listening to the recorded webinar, you will be getting a very useful thing from all of this. So let's move towards our today's agenda. What will be the major takeaways? First of all, we are going to discuss what are the list of documents which are required for ITR filing. Then what is Form 16, how you can get your Form 16 and how that Form 16 will be useful for your income tax return filing. Then what is the importance of Form 26AS, from where you can download it, how you can download it. This all will be seeing, and this will be followed up by what are the major tax saving ideas via which you can reduce or you can minimize your tax saving, your tax liability to a great extent. This will be followed up by Q&A session. So if you are having any doubts during this session, you can just post down in the chat box. I'll be looking to the questions, and I'll be answering all those questions at the end of the PPT. So let's move towards our first topic, which is the list of documents which are required for income tax return filing. So as we all know that normally 31st July of the assessment year following the financial year is the last day of filing your income tax return of any given financial year. So the process of income tax return filing in India usually takes some preparations. This is why the government usually gives us 4 months window period to compile all our documents like salary, income details, then bank statements, previous tax statements, and any more documents which are required. So this procedure varies as per the income earned per year and the income sources like salary, business profits, and any investments if you have made, like that. So the income tax return normally is annexure-less return, which means no documents or proofs are required to be attached with the returns to claim the deductions, which makes it ambiguous for the taxpayers to so that whom they must hand over all those certificates and proof. If you forgot to submit any of the documentary proof to your employer, then you don't need to worry about anything. Even at the time of your return filing, you can just enter the amount and claim deduction of those documents. And there you don't require to attach documentary proof with your return. It's just that you need to enter the correct amount. Otherwise, what will happen if your case goes into scrutiny? Then at that time you will have to submit all the documentary proof to the assessing officer or to the income tax authority if you get the notice. So that is why, to avoid all those notice cases and penalty things, we request you to just enter the correct amount of the whatever investments you have made as per the act, and accordingly you can claim the deduction. So the taxpayers must preserve those certificates and receipts for future, as I said, and you don't need to attach them to any of the return which you are filing. So in case if you are getting any kind of notice at that time, that will be useful for you. Just compile all the documents and file your income tax return. Now, what are the documents which will be requiring majorly? First and foremost document for a salaried individual is Form 16. So for salaried individuals, Form 16 is a very important document which is required at the time of your return filing. We'll be discussing about Form 16, what are its components, what are the deductions which are included in the Form 16, all these in the upcoming slide. And I'll also be discussing Form 26As in later slides. Then, if you are having any kind of interest certificates from banks, post office, that will be required for your return filing. If you are having any saving bank interest statement or any interest income statements for fixed deposit, if you are having, then TDS certificates which are issued by banks and others, keep that handy with you. After that, if you are having any kind of tax saving investment proofs, so all the tax saving investments made by you and the expenditures which are incurred by you will be eligible for deduction. That you will have to claim, and there are many kind of chapter 60 deduction like ATC, ATD, ATCCD. What is NPS deduction? Each and every deduction I'll explain you in the tax saving ideas part, but here to just give a brief that whether all the investments whatever you have made, like employee provident fund or public provident fund, PPF, then ELSS mutual fund, all these documents you'll have to keep it handy with you and you'll have to include it in your income tax return. If you are submitting these documents, documentary proof to your employer, then well and good, they'll include that in your form 16 and you will have to just attach your form 16 with your income tax form. But if you forgot to submit any of those documents, at that time you'll have to just enter the investment amount in your return in the particular section in which you have made the investment. That's it. Apart from the investment, there are even certain expenditures that are also eligible for tax benefits. Examples of these expenditures under ATC includes like home loan principal repayment, then tuition fees, any stamp duty registration charges if you have paid, all those you can claim it under the respective section. Then if you have made any kind of investment under section 80D to 80U, then for these sections some documentary proof will be required that you'll have to attach. After that, if you have taken any kind of housing loan, so from bank you will receive a home loan certificate. In that home loan certificate, you'll have to enter the interest component in the income from house property head and the principal repayment under section ATC. So that interest certificate will be very useful for you to reduce your tax liability and to lower your taxable income to a great extent. Then at last, just note down that you'll have to mention correct bank account details in your income tax return filing, because whatever bank account details you are entering, in that only you will be getting your refund amount. So make sure that you are entering the correct account number, correct IFSC code and the name of the branch. Then at last this will be followed up by Aadhaar number. So these are the major documents which are required for your return filing. Before you file your return, just make sure that you are having all of these documents handy with you before you file your income tax return. Now coming on to our next topic, which is form 16. How you will get your form 16. Now many of you would be having this question that from where I can download my form 16. There is no way to download your form 16. So first of all, what is form 16? It is essentially a certificate which the employers issue to their employees. Or I can say it gives a detailed summary of the salary paid to the employee and the TDS deducted. It generally comprises of two components, part A and part B. In case if you lose your form 16 or if you are not getting your form 16, then you can request a duplicate form 16 from an employer. And say for example, in one financial year, you have switched your jobs in two companies or more than two. So it is your responsibility to get the form 16 from both the companies. Let's take one example. For 6 months, you were in one company and after 6 months, you switched to another company. Then whenever you will be filing your return at the end of the year, at that time, you will have to attach both the form 16 in your income tax return, so that you will not be missing any kind of your salary information. You will not be missing any of the deductions which you want to claim. All your income details as well as your exemption details and your deduction details should be included at the in your income tax return form whenever you will be filing your return. So to avoid any kind of income details and anything, you need to attach both the form 16 in your income tax return. Then coming on to the components of Form 16. Part A of Form 16, it provides the details of quarterly TDS deducted and deposited, details of TAN of the employer along with the other information. So, employer can generate and download this part of Form 16, and employer will only provide you the Form 16. We will not be having any option to download our Form 16. In that, name and address of the employer would be there, then TAN and PAN of the employer, PAN of the employee, summary of the tax deducted and deposited quarterly, which is certified by the employer. Then coming on to the part B of Form 16. Part B of Form 16 is an annexure to Part A. It is to be prepared by the employer for its employees, and it will contain the details of breakup of salary, deduction which are approved under Chapter 6. So as I said, if you change your job in one financial year, you should take Form 16 from both the employers. Now coming on to the breakup of salary. Under Part B of Form 16, there is also one question that should I pay income tax on every rupee which is earned as salary? Answer to this question is no. You will obviously get some kind of deductions and exemptions against your income. Now, what are all of those exemptions? First and foremost exemption, which majority of the salaried individual avail, is the house rent allowance, HRA exemption. HRA exemption is the exemption which we get on HRA. Income tax law provides three basic conditions. First one is actual HRA which is received by the employee. Second, 40% of the salary for non-metro city, or 50% of the salary if the rented property is situated in metro cities like Mumbai, Delhi, Kolkata and Chennai. And the third condition is actual rent paid less 10% of the salary. So whatever will be the least amount from all of these three conditions will be allowed as your HRA exemption. Some people are having this doubt that whatever rent amount I am paying, that entire amount I will be taking as HRA exemption. This is not the case. This is a very wrong myth which many of us are having. But the correct way to claim the HRA exemption is that whatever will be the least amount from these three conditions will be allowed as your HRA exemption. And a housing loan as well as I am paying rent also. So can I still claim both of them? Answer to this question is yes. You can claim HRA also and housing loan benefit also. But only in that case if you are not having your rented property and your housing loan property in one city. If it is in same city, then you cannot claim. I'll explain you this by one example. Say for example, you are having your house property in Mumbai which is let out, and you live in different house in Mumbai and pay rent for that. In that case, can you claim HRA exemption? Then no, you cannot claim HRA exemption if you are living in different house in the same city and you also have a self-occupied house property in the same city. But if you are living with your parents, and in that case if you want to claim HRA exemption, can you do that? In this situation, you can claim HRA exemption, but you'll have to give the rent amount to your parents, and your parents will be including this rental income in their income tax return. Then only you will be able to claim the HRA benefit. Now, you will also be required to submit all the documentary proof like your rental agreement or rent receipts to the employer for claiming the HRA benefit. And if you yourself want to claim the HRA exemption amount properly, then there is the HRA calculator of tax buddy. On Google, you will be getting it very easily. You can just open that. You will have to enter the respective amounts of your basic salary, of the HRA, whatever you are getting it from your company. Then whatever rent amount you are paying, after including all of these amounts, you will be able to calculate the correct HRA exemption amount, and that you can include it in your income tax return. And one more thing, if that property in which you are staying is in your own name, of that property you cannot claim the HRA exemption, because the property of which we ourselves are the owner, in that property itself we cannot live on rent. So the property should not be in your name, it should be in the name of your parent, whether in one single name or of both the parents' name, it can be. This is all about the HRA exemption thing. After that, if you are having any kind of leave travel allowance provided by your company, and if it is included in your salary slip, then and you are obviously claiming the amount, if you have traveled during the last year anywhere, then you can include it in your LTA exemption list. Then if you have any kind of standard deduction, so standard deduction is flat deduction which you will be getting from your salary, which is rupees 50,000. So it will be reduced from your salary income. Then professional tax, this depends generally on the state where your company is situated, and it is also available against our salary income. It is normally rupees 2400 or 2500 per year. Then major deduction list comes, which is deduction under chapter 6A. In this, first and foremost deduction which anybody avails is ATC deduction. So before coming on to the ATC deduction limit, I would like to throw some light on housing loan department thing also. So obviously buying our own house is dream come true for everyone, right? For that purpose only, Indian government has provided many kind of taxation benefits for the people who are availing the housing loan, and how they can reduce their taxable income. In this situation, if you have taken a housing loan from bank or any kind of financial institution, then you will be receiving an interest certificate from that particular bank. In that you will see two components, interest component and the principal component. Interest component will be covered under section 24, and you can claim the deduction under income from house property head up to the maximum limit of rupees 2 lakh. And principal repayment part will be covered under section 80C, which now we'll be discussing more about section 80C and its limit. And if you have taken the principal repayment, it will be going under 80C limit up to 1.5 lakh rupees. And also, if you have paid any kind of stamp duty, registration charges, all of these expenses in the year in which you have incurred, in that particular year, you are eligible to claim all of those under section 80C limit only. So interest part will be going under income from house property head, and the principal repayment part will be going under 80C section. These are the two bifurcation of the housing loan components. And there is also deduction in respect of interest paid towards home loan during the pre-construction period. Say for example, you bought an under construction property and you have not moved in yet, but you are paying the EMIs. In this case, your eligibility to claim the interest on the home loan as deduction begins only upon the completion of construction, or immediately if you buy a fully constructed property. So does this mean that you would not enjoy any kind of tax benefits on the interest paid during the period falling between borrowing of loan and the completion of construction? No. Let's understand this why. The income tax law provides for the claim of such interest also, which is called as pre-construction interest period, as deduction in 5 equal installments, starting from the year in which the property is acquired or the construction is completed, over and above the deduction you are otherwise eligible to claim from your house property income. But the maximum eligibility would be capped up to 2 lakh rupees only. Then coming on to the deduction part about ATC, ATD, ATC CD1B, all of these deduction I'll be explaining all of these in the upcoming slide in the tax saving ideas. Before that, first we'll be discussing about what is Form 26AS, how we can download Form 26AS. So Form 26AS or tax credit statement is one of the most important document for any taxpayer. It truly reflects that how much tax you have paid to the income tax departments, either by yourself or through the other taxpayers. It is consolidated annual tax statement that shows the details of tax deducted at source, then tax collected at source, advance taxes paid, along with the self-assessment tax. This form also shows the details of sale or purchase of immovable property, then mutual funds, cash withdrawals, if any, or withdrawals from saving accounts, etc. So taxpayer can claim the tax deducted, reflecting in their Form 26As while their income tax return for financial year. So in your Form 26As, when you will be downloading your Form 26As, you will be seeing your entire salary income details, income, and how much tax has been deducted monthly by your employer. That will be reflecting. Then if you have any kind of interest from fixed deposit and your bank is deducting TDS, that amount will also be reflecting in your Form 26As. If you have sold or purchased any kind of immovable property, that will be reflecting. So this is why the Form 26As is useful for each and every person before filing our income tax return. Now comes the point that how we can download our Form 26As. As we all know that Income Tax Department has relaunched its website. So first of all, we'll have to go to incometax.gov.in. Then we'll have to enter our user ID, which is our PAN number, or even we can enter our Aadhaar number, or you can use other ID like internet, net banking and anything. So after entering our PAN number, we'll have to enter our password, and there will be one confirm secure access message. Just select that tick box, and you'll have to click on continue. When you will click on continue, you will see this kind of page in front of your screen. So here, this is the dashboard page, main dashboard. You will have to click on you'll have to go on to e-file. Then in the income tax return form, you will have to go on to view Form 26As. When you will be clicking on this view Form 26As, you will be redirected to the income tax traces portal. So after going to the traces portal, you'll have to select the correct assessment year of which you want to download your Form 26As, and you can just view it, or even you can download it as PDF, and that Form 26As will be very useful for you at the time of whenever you will be filing your income tax return. Now coming on to the deductions which are available to the salaried individuals or to other individuals as well. What are the major deductions? First and foremost deduction which everybody enjoys is ATC. So ATC being the most famous deduction for every individual also. That is why the government has provided deduction of around 1.5 lakh limit. This is the maximum limit if you are investing into ATC in any of the investment list of ATC, whatever amount you want to invest, but the maximum deduction which you are going to get will be capped up to 1,50,000 rupees only. Now, what are the components which are included under ATC? We'll be discussing each one by one. Our first very common deduction which is included in ATC is the EPF, Employee Provident Fund. So whenever we get our salary, in that salary slip, we see in deduction part ATC EPF amount is mentioned always, every month. So that amount of EPF is always included that is deducted by the employer only, and the employer get deduction for the amount which is contributed towards EPF of the employees as business expenditure. There is no tax liability for the employee in respect of contribution made by the employer up to 12% of the basic salary, beyond it which becomes taxable in the hands of employee. So likewise, in case the aggregate amount of contribution made by the employees taken together, if it exceeds 7.5 lakh, then such excess amount becomes taxable in the hands of employee. After that, the other component which is included under ATC is the children's tuition fees. The tuition fees which is paid for the education of 2 children is eligible for tax deduction under ATC for any school, college, university, and it should be for full-time courses only. And the limit again would be capped up to 1.5 lakh. Then in case if you have taken any kind of life insurance premium, then the annual premium which is paid by you in the name of taxpayer or taxpayer's wife and children, it is an eligible tax saving investment under ADC, and the deduction is valid only if the premium is less than 10% of the sum assured. Then, as I said in the previous slide about the home loan thing, so the repayment of principal amount is included under ATC limit, and even the stamp duty and registration charges are also part of your ATC deduction limit. Whatever investments you are making into ATC, remember that the maximum limit will be capped up to 1.5 lakh. Even if you are investing more than this amount, then too you are going to get deduction of 1.5 lakh rupees only, not over and above this. Then talking about the other components, other deduction, 80CCC talks about the deduction for life insurance annuity plan. So if you have taken any kind of, it allows the deduction for payment towards annuity pension plans received from the annuity or amount received upon surrender of annuity, including interest or bonus accrued on the annuity, is taxable in the year of receipt. So let's now talk more about NPS. NPS deduction covers 80CCD 1B. If you think that you have invested entirely into 1.5 lakh limit and your 1.5 lakh limit of ATC has been exhausted completely. Now you want to invest more, and if you want to think about of your long-term future plans, then NPS is the best option in which you can invest into. If you're concerned about your retirement and you're looking forward to plan with tax saving benefits, then NPS is best tax saving instrument because it is known for its user friendly features, low cost structure and flexibility. Here you can invest a minimum amount of 6,000 rupees in installments and or at least 500 rupees as lump sum. Being the investor, you can decide how you want to allocate your money for investments or for any kind of corporate bonds and equity. In this section, you can claim any additional self contribution up to rupees 50,000 under section 80CCD 1B as NPS tax benefit. So as this scheme therefore allows tax reduction of up to rupees 2 lakh in total. From ATC you can claim 1.5 lakh rupees, and from NPS under section 80CCD 1B you can claim 50,000. So from these two sections you can claim 2 lakh rupees in total as deduction. And even as a pension scheme, it is important for you to continue investing until the age of 60. But if you have been investing for at least 3 years, then you may withdraw up to 25% for certain purpose, like your children's wedding or higher studies, or if you want to build or buy a house, medical treatment for yourself, your family, anything. In this situation also, you can make a withdrawal up to 3 times with a gap of 5 years in the entire tenure. There are normally two primary accounts in NPS, Tier 1 and Tier 2 account. The Tier 1 account is default one and Tier 2 account is voluntary. Withdrawals from Tier 1 account is not permitted, but from Tier 2 accounts it is permitted. Here tax exemption in Tier 1 account which you are going to get will be rupees 2 lakh, 1.5 lakh from ATC, and from ATCCD 1B it is rupees 50,000. And from Tier 2 account it is 1.5 lakh for government employees, and for other employees it is none. Minimum NPS contribution is there in Tier 1 and Tier 2 as well, but there is no maximum limit of contribution in both the accounts, in Tier 1 as well as in Tier 2. This scheme encourages people to invest in pension account at regular intervals during the course of employment. So this is all about the NPS. Now coming on to the next deduction which many of us avail is the health insurance or medical insurance premium. If your age is below 60 years and you have taken a medical insurance policy for yourself, your spouse or your children, then you are eligible to claim deduction up to rupees 25,000. And If you have taken any kind of medical insurance policy for your senior citizen parents whose age is above 60 years, then in that situation, the deduction amount will get increased to 50,000 rupees. If you have not taken any medical insurance policy for senior citizen parents, but still you are incurring medical expenditure on their behalf, then in that case also you are eligible to claim deduction of 50,000 rupees for your uninsured senior citizen parents. And for yourself, you can claim for the preventive health checkup, and the amount will be 5,000 rupees only. In this 5,000 limit, remember that you can also claim the expenditure of RT-PCR test expenses. These all can be claimed in the preventive health checkup. So this is all about the ATD expenditure. Then if you have taken if you have, as I said, you have taken a housing loan, then in that situation, ATEA section comes into picture. Taxpayer can claim deduction of total 3.5 lakh rupees for interest on home loan if they meet the conditions of section 80E. Now, what are those conditions? First one, that home loan must be taken from any financial institution or housing finance company for buying a residential house property. Loan must be sanctioned during the period starting from 1st April 2019 till 31st March 2022. Then third condition is that stamp duty value of the house property should be rupees 45 lakh or less. Then the individual taxpayer should not be eligible to claim the deduction under existing section, which is 80EE. If you are claiming deduction of 80EA, then the taxpayer should be the first time home buyer. He should not own any kind of residential property as on the date of sanction of loan. So first of all, just exhaust the limit of section 24, which is 2 lakh rupees, and after that only you can claim this deduction limit of 1.5 lakh under section 80EA. Only if you are fulfilling all the conditions of 80EA section. Then as of now, the trend is of the electric vehicle. So if you have purchased any kind of electric vehicle and you are paying the interest amount on that, then in that situation, government has provided benefits of 80EB section of the interest on electric vehicle component thing. If the individual taxpayer may have electric vehicle for personal use or for business use, then this deduction would facilitate individuals to claim the interest paid on that vehicle loan, and the amount which you can claim as interest will be rupees 1.5 lakh. In case of business use, an individual can also claim the deduction up to 1.5 lakh rupees under section 80 EEB. Any interest payment which is above 1.5 lakh can be claimed as business expense. To claim it as business expense, it is necessary that the vehicle should be registered in the name of owner or the business enterprise. Do note that the individual taxpayers should obtain the interest paid certificate and keep the necessary documents such as tax invoice and loan documents handy at the time of your return filing. Now, there are also some conditions to claim this interest on vehicle loan, electric vehicle loan. First of all, that interest loan must be taken from any bank or loan institution only. Then second condition is that loan must be sanctioned during the period starting from 1st April 2019 till 31st March 2023. If you have already purchased your electric vehicle during this tenure, or you are planning to purchase in the next upcoming time up to 31st March 2023, then you can claim the interest reduction up to rupees 1.5 lakh under section 80EB. You can just maximize your tax savings to the great extent. You can reduce the taxation burden using all of these reduction limits, all of the deductions. Then apart from all of these deductions which are mentioned over here, there are other deductions as well. If you are making any kind of donations, then 80G section, in that section you can claim the deduction up to 50% or 100% of the expenditure which you have made. Now, these were all. This was all about the deductions which you can claim. Now, if you want to file your income tax return, then taxbuddy.com is here to help you out. There are many tax experts, very qualified tax experts who are going to help you with your taxation filing, and your filing will be done very smoothly without any problem. If you can just download the app from the Google Play Store. If you will download the app, and then you can just click on start filing, and as per the details which you'll be providing, that you are having one salary income, if you are having any house property income, capital gain income, business and profession income, as per your income details, respective plans will be provided to you. You can select whatever plan you are comfortable with, and after purchasing that plan, tax expert will be assigned to your case, and you'll have to just provide all the documents to them, and they'll be filing your return on your behalf. Even if you, after filing, in case if you get any kind of tax notice, then also they'll be dealing with the notice case, and everything will be done very smoothly without any problem. So if we are still not filed your income tax return, still we are having plenty of time. We are having 1 month to go. You can just file your income tax return on time before 31st July of this year, and you can avoid the last time hustle bustle uh, whenever you will be filing your return. Then these are all the other tax saving, the all the services of tax buddy which you are going to get. You can just visit the website, and you can explore it to a great extent, and you'll be finding it very useful for your ITR season. This was all about today's session. Now I would like to be taking some few questions from the viewers. If you're having any questions, you can please ask. Are we having questions? Guys, if you're having any question, you can post down in the chat box. I think we are not having any questions. So I hope the session was very useful for you guys. Stay tuned, subscribe to the channel. Thank you so much. We'll be seeing you soon in the next seminar. Bye bye. Have a good day.